Well, it's been a fantastic rally at the markets today. The pullback continued with renewed vigor as bears found themselves trapped. The Sensex zoomed 335 points, while the Nifty added nearly 100. On What's Hot Tonight, we ask, is this rally sustainable? Joining us, Sanjay, Sinha, CEO of DBS Cholamandalam AMC, and Puneet, Nanda, CIO of ICICI Prudential Life Insurance Company. Puneet, Sanjay, many thanks for joining us. Let me begin by asking you, Puneet, does it feel good about the fact that we are at 10,000, and more importantly, do you think this will sustain?
You know, one has to look at it both from a short-term and from a long-term perspective. From a short-term perspective, what we are seeing right now is, I think, largely a reflection of what is happening in global markets. With central banks around the world, specifically US, pumping in money, and people starting to get a little bit more confidence that perhaps stability is coming. And I guess that is getting reflected in India as well. The other thing, frankly, which is positive in India is that there are some sectors which have started showing some positive signs, you know, cement, auto, steel, airline. So there are some positives. So which is why I guess what we have seen is being reflected in the market. Having said that, I think the market is still on tenterhooks, primarily based on what is going to happen in election, which government will come, what will be the policies. So I think we'll remain very, very volatile. So while we've seen very sharp 20% up move, and hopefully it will sustain, but I would not be surprised if we see, you know, downward movement also in the short run. In the long run, though, I think at the current price levels, with the expectation that even after a slowdown, the economy will grow perhaps at 6% or thereabouts. At the current level of pricing, you know, maybe 9 times or whatever it is, clearly it's a very attractive time to buy. So if one is willing to ride out the volatility in the short term, if one is willing to absorb some risks over the short term, it is absolutely the appropriate time to build a good long-term portfolio, I would say.
Well, as we speak, there's been a fairly strong opening in the US markets as well. They are about 0.5% up. Sanjay, if I can come to you, it's been a spectacular bear market rally, all right, but it's also been a fairly strong pullback from the 7,500 levels. Do you think the upward move will continue?
See, if you look at as to what got this rally started in the first place, the cues were not local in nature. We saw the global markets beginning to rally, and we also saw the rupee appreciate at the same time. I think both these things have to continue for the sustainable rally to continue for some more time to come. There is, of course, one fact which is also true, that there is money which is sitting on the sidelines, which has not substantially entered the market. So therefore, if this rally continues for some more time, that money will also come in and fuel the later part of the rally.
Are you buying right now, and what's your assessment of money coming into the market? Is fresh money coming in?
No, clearly fresh money is coming in. The pace has slowed down because sentiment is obviously quite weak. Having said that, it's not as if the money has stopped. You know, I will give you the example of insurance companies, for example. Insurance companies get money from 2 sources. One is the new policies that we sell. That does get affected by sentiment. Largely, our business is ULIP, so that impact has been seen. So there is a sharp impact. But we also get a lot of money from the old policies sold, what is called renewal premium. So, you know, policies that you may have bought 1, 2, 3 years back, you pay your annual premium. That continues to be very strong. So, for example, for us as a company, for the quarter ended December, while our total premium grew at 28%, the renewal premium alone grew at 75%. So because of that, net inflow on an overall basis is there, much lower than what one would have expected in the good times, but it is there at least for the insurance sector. And as a result, your other question was, are we investing? Yes, of course, we continue to invest.
Sanjay, what's going to be the next big factor for the markets going into April? Elections, earnings, or is it going to be global factors?
See, right now there is a unipolar view which is held by the market that the Indian markets will rally only after the elections, which in my opinion is a very risky position to hold, because there are very few contrarian views to that point. If this rally is going to continue till the time as we get to see the outcome of the elections, right now the biggest fear that the market has is that we will probably have an unstable coalition. And contrary to the popular impression, suppose we have a stable coalition in place, then this rally will probably accelerate much more from where it is right now, and I think will give rise to a very strong temptation for profit booking at those levels. So the expectation that the markets will rally post the elections might actually turn out to be a serious amount of profit booking which might happen post the elections.
Sanjay, Sinha, Puneet, Nanda, many thanks for joining us this